In this video, we're going to have a look at AFLAC Incorporated, ticker symbol AFL. This is a requested video. If you would like to request a video, please let me know in the comments below. AFLAC Incorporated is a company that provides supplemented health and life insurance products in the United States and Japan. The stock has a 52-week range with a low of $60.30 and a recent high of $81.82. It really has been on a run since mid-March this year. If we zoom out even further, we can see it's been on a much longer run really. If it wasn't for the pandemic drop-off, it would have been a consistent upward trajectory. If we look at the key metrics, it's seen a 111.42% return over 5 years, 104.98% return over the last 3, and 22.58% over the trailing 12 months. Solid performance. It has a PE ratio of 10.78 and market cap of $47.8 billion. If we have a look at the dividend metrics, the yield is currently 2.44%. The compound annual growth rate of the trailing 12 months has been 18.71%, 14.8 over 3, and 13.1 over 5 years. It also states it has 41 years of consecutive increases here. I did have to check to see if this is correct, and it's been paying a dividend for that long. On the AFLAC website is an investor section. It has historical data starting in 1992, which would make it actually 31 years. It's had regular increases starting at 1 cent in 1992, all the way up until where we are today at 50 cents a quarter. Looking through the recent presentation, if we start with the Japan section, they are the #1 provider of cancer and medical insurance in Japan. The market has grown 2.6 times over the past 20 years, and they expect it to grow further. They're launching new products, which is good to see, to help with future growth. They plan to strengthen on distribution channels, improving its sales team to increase productivity, having a partnership with Japan Post Group, increasing its sales offices to provide more support. This is good to see as there was no real growth between 2021 and 2022. If we look at the US segment, it maintains market leadership, being 3 times the size of its nearest competitor. They point out growth opportunities with the current US working population at 156 million, with a lot of untapped potential. Sales in the US have been better, although margins have been squeezed. Returning capital to shareholders has been strong and consistent. Share buybacks have also been consistent, going from an all-time high of 1.26 billion shares in 1993 to 593.6 million as of September this year. Cash to debt is exactly how you want to see it. The company is in a very strong position, with 111.31 billion in cash, 6.96 billion in debt, leaving a cool net of 104.35 billion, leaving it well positioned to continue moving the company forward, continue buybacks, and of course being able to continue growing the dividend, having a payout ratio of only 22.74%. AFLAC have their own investment calculator which checks how the stock has performed against the S&P. If you'd invested $10,000 10 years ago and reinvested the dividends, you would have had a return of 210.34%, ending with a total value of $31,000, beating the S&P, which would have given you a 150% return, with a return of $25,000. Fantastic performance, no wonder they include a calculator. The AFLAC calculator only goes back to 2011, so I'll use the TickerTech one to check back further. Over 20 years, it's even better, with a massive 612% return, turning your 10k into 71,000, 61k if you'd invested in the S&P, a great track record. Let's see what the analysts are forecasting. Market beat have an average price target of $77.80, which is 4.88% downside from where we are today based on 9 analysts. Overall consensus is hold with 3 buy and no sell. Tip ranks have an average price target of $80 with moderate buy. Bullish sentiment in news and via blogs. And Zacks have an average buy price of $78.91, 3.95% downside from where we are today based on 11. From the targets and market beat tip ranks and Zacks, an average price between the 3 is $78.90. If we have a look at value investing, I've had a look at what the intrinsic value calculations are based on the dividend discounting model. It has a fair price of $78.06, which is 4.6% downside. If we look at trading multiples, it has a fair price of $66.49, which is 18.7% downside. If we take an average of the analysts' expectations and investing models, that would give us $74.48. With a 10% margin of safety, that will give a buy price of $67.03. There is a lot to like about AFLAC, solid returns and dividend growth. Everyone is living for longer now, and AFLAC provides cover for all health, life and even pet needs. It's a stock that has been on my watch list for a while, and I'm really considering adding it to my portfolio, at the right price of course. As usual, thanks for watching. If you enjoyed the video, please like and subscribe.